Well, let's go straight to the day's market action. A day after the US Fed hiked rates for the fourth time in 2018, equities across the globe are feeling the pinch. Shares have opened in the red on Wall Street, this after yesterday's sell-off. And it was pretty much a similar picture across Europe, where the FTSE has hit its lowest level in over 2 years. Now, the Fed chairman, Jerome Powell, making it clear that there could be 2 rate hikes in 2019. But he did also talk about some uncertainty on the timeline, and that clearly is weighing on investor sentiment. That's the market action in the US. The Nasdaq, of course, just opened, but the S&P is down by about 0.5%. Europe also in the red. Back home, the bulls did put up a fight on the Lal Street. The markets bearing most of their losses in the last hour, ending marginally in the red. The mid-caps managing to hold on to the green and close just flat, but still with a green tick. So that was the market action, but the action in the currency market was what created headlines. The rupee broke below the $70 mark in intraday trade, led by a fall in crude prices as well as a weakness in the US dollar. The Indian unit ended the day at 69.66. Crude prices, on the other hand, have fallen for the 4th straight day. Oversupply concerns surfaced. Both Brent and NYMEX are trading with cuts of over 3%, 55.57 now on Brent. So crude prices fall and the rupee appreciating today. Well, the top story this evening: in a bid to boost liquidity, the government has decided to pump in 41,000 crore rupees into public sector banks. This move is part of a supplementary demand for grants tabled in Parliament. So which banks are likely to get more capital? The Finance Minister laid out 4 broad categories of banks who will benefit. First, banks that need to meet the capital regulatory norms. Secondly, government believes 4 to 5 PSU banks can move out of the prompt corrective action framework with this capital infusion. The PCA norms were imposed on banks with large non-performing assets, and it imposes lending curbs on these banks. That has been a cause of concern for the government. Thirdly, the government also expects 3 PSU banks that could fall into the PCA framework for lack of capital to stay out of it thanks to this fresh infusion. And finally, capital will go into banks that are getting amalgamated this year, like Dena Bank, Vijaya Bank, which are being merged with Bank of Baroda. Listen into the Finance Minister, and then we bring you more analysis.
We'll now have 42,000 plus 41,000, which is 83,000 for the balance year. And that will make this year's recap to a total of 1,06,000 crores. The first, of course, is to ensure that the banks meet their regulatory capital norms. The second will be that the better performing PCA banks are given capital to achieve a 9% capital to risk weighted asset ratio, the CRAR, so that some of them are able to come out of the PCA itself.
Well, the Finance Minister laying out the roadmap for the capital infusion. Sapna Das, who broke that story, joins us now with more details. Sapna, as we heard, the centre is ready to infuse recap bonds worth 83,000 crore rupees over the next 3 months. Would we see some banks exiting the PCA framework without the norms actually being tweaked?
Well, we just heard the Union Finance Minister, Mr. Arun Jaitley, speak on the same issue. 83,000 crores worth of recap bonds waiting to be infused in the public sector banks over the next 3 months. It's a big number that we are looking at. This will also help some of the banks complete their fundraising plans from the market. 58,000 crores was the original target that had been set on the recap plan. You know, that distance, the banks have to do some more bit of catching up in terms of reaching that goal post. Having said that, the issue of regulatory capital and those 3 to 4 banks under the PCA framework, some of them may see an exit from the framework. If you look at the NNPA numbers of Allahabad Bank and Bank of India, they're already below 8%, though of course still far away from the 6% NNPA levels. But the government is completely committed to help the banks meet that meet that percentage requirement. Also some other banks like, say, for example, Corporation Bank or even Bank of Maharashtra, probably their indicators are also picking up. So these banks will definitely get the additional recapitalization. And the expectation here that, possibly they may see an early exit from the framework. Now, on this particular issue, we did ask the banking secretary what are their expectations from the Board for Financial Supervision, because the entire PCA framework matter, probably a call will be taken by the BFS on this matter. Let's just hear out what he had to say on this.
The regulatory regime, as per the prescribed regulatory regime, the capital base is to be maintained. The government's additional supplementary and additional budgetary provision will equip these banks to whatever is the maximum regulatory prescribed norm and the 6% NNPA. Thereby, it will facilitate the BFS also to take a decision as per their norms. But that's within the BFS's mandate.
So that's the plan, and the hope is that at least 4 to 5 banks could exit the PCA framework with this capital infusion. That has been a cause for concern for the government. But let's talk about the big story tonight. Congress leader Jyotiraditya Scindia believes that farm loan waivers may not be the ultimate solution to farmers' distress, but that there is a need to provide immediate succour to them. Remember, the Kamalnath government in Madhya Pradesh waived off farm loans of up to 2 lakh rupees just hours after coming to office. Not only MP, the Congress government in Rajasthan and Chhattisgarh have also waived crop loans. Now, this has led to banking industry captains raising alarm. They believe farm loan waivers, if implemented across states, would be disastrous for the country. But Scindia, one of the architects of the Congress's victory in Madhya Pradesh, told my colleague Parikshit Luthra that when people are in pain, it is the government's job to make sure that the exchequer is available to them. Also acknowledging the fact that it's not going to be easy to balance the budget, but saying that it will be their responsibility to do so, and they will do it by driving industrialization and investment as well. Listen in.
You don't measure quality of life of people in terms of the bank balance in your account. No one asked us in UPA 1 to do a loan waiver. We did a loan waiver of 72,000 crores. We delivered 9.5% growth rate. We delivered a 7.7% CAGR over a decade in India, which has never been done before. Right?
But Mr. Scindia,
the environment was up. When people are going through pain, it is the job of government to make sure that the exchequer is available to the people who are in pain.
But Mr. Scindia, the fact is, if you take outstanding farm loans for all these states, it's about 1.1 lakh crore rupees. That's a huge number. And if you give a 65,000 crore loan waiver for
you don't have a problem doing a write-off for corporate loans. You don't have a problem taking haircuts. You don't have a problem setting up an ARC, an asset reconstruction company, and taking 30 cents on the dollar.
But Mr. Scindia,
but you have a problem waiving off farmers' loans.
But it's not an ultimate solution.
It may not be. Okay, so now you come to the right point. It may not be the complete solution. But when something like this is required, when farmers are committing suicide, when they are not getting the required MSP price for their crop, whether you take soya, whether you take urda, whether you take the price of onions today, the price of garlic today, the price of potatoes today, which are being thrown on the road, right? And when this government has provided an environment where on the one hand input costs have risen phenomenally, and on the other hand MSP prices have crashed completely, it's a double whammy on the neck of the farmer, right? Which is why you've got 16,000 farmers a year committing suicide in this country. So you have to provide succor, you have to provide relief. I agree with you that that may not be the complete solution. You have to make sure that you lower input costs, you have to increase MSP so that the margins that we had in our time, which was ranged between 28% to 42% depending on what the harvest was. That environment is brought back again as opposed to a loss-making environment, number one. Number two, take the farmers up the value chain. It's not only producing harvest, but it's also ensuring that we take them up the value chain on the food processing side and make them part of that value chain. That today is the ultimate challenge before the country.
Well, that's Jyotiraditya Scindia defending the Congress's decision to waive farm loans, saying that it is the need of the hour. You need to bring farmers back to ground zero. And of course, saying that the Congress will try and ensure that investment picks up across these states so that they will be able to balance the budget. Now, speaking of the agri-distress, the government today admitted before Parliament that it does not have any data on farmer suicides since 2016. Now, remember, CNBC TV 18 had reported about this in the past, with renowned journalist P. Sainath speaking about this on many of our shows. Archana Shukla joins us now with more details. So, Archana, this is a response to a question that was posed to the government in Parliament, saying that they do not have data of farmer suicides post-2016. Now, this is an issue that Sainath had raised on the channel with you in your interview with him. Take us through why exactly there is no data.
Well, ma'am, you speak about the 2016 data. Now, 2016 data is also not published data. That's also provisional data. Let me run you through what have been the published data. We have published data only till 2015 on farmer suicides on the National Crimes Record Bureau. Till 2015, in 2015, 12,602 farmer suicides were recorded by the Bureau, after which there has been no published data that the Bureau has come out with. We were told, again in the Parliament session, that the Crimes Record Bureau is redefining the way it publishes the data and, adjusts it and accounts under different segments, and that's the reason why it has not been published. In 2016, in a response to a question in Parliament, the minister had said that 11,370 farmer suicides have been recorded in the country. Again, this is not published data. In Maharashtra, again in an assembly question and answer session, when questions were raised, the state minister for agriculture had said that Maharashtra has recorded 696 farmer suicides between January and March 2018 and 639 farmer suicides between March and May. Again, these are provisional data, which means this is not the actual amount. And if you go, what we understand is that the government had shut down the National Crimes Record Bureau, and this is something that P. Sainath also claimed in my interview, that was the reason why there is no published data on farmer suicide. Again, 2015 and 2016 were two harsh drought years, but we still don't have any data. Listen into that very detailed conversation with P. Sainath, where he explains, according to him, what is the reason why we don't have published set of farmer suicides data in a country when we keep talking about agri-distress.
In 2013-14, they put the data through major methodological changes in order to... So now what happens is data after 2014 is not comparable backwards. Yeah. So they've done this with GDP. Yeah. They've done it with the GDP of another era and another government. Okay. So what is suicides about? Then 2015, the last NCRB report came out in 2000. For 2016 and 2017, the National Crime Records Bureau data on suicides has not been published.
There's some provisional figures that they gave for 2016.
They put selective data out in Parliament. They haven't published a damn thing. In 2017, they got so fed up with the disputes and everybody pointing to NCRB, they shut down the NCRB. They shut it down, merged it into a body called Bureau of Police Research and Development. Now, merging NCRB, which gets data collected through the states from every police thana in the country, that's a census. That's a police census. Merging it in the Bureau of Police Research and Development, which gives some outsourced sample surveys, is like merging the general election of India into an opinion poll. Okay, that's what. Now, but when they did this, they found that they had hurt themselves very badly. Okay, suddenly, the other data is also there in the ADSI, in the accidental deaths and suicides of India. 10 months later, they reversed the decision, demerged the NCRB, and the NCRB re-emerges. The only time that I have found in the history of the Indian bureaucracy that a major division of the Home Ministry is shut down, merged, demerged, and re-emerges.
Well, that interview there gives you some sense of why today, in response to a parliament question, the government has said that there is no data on farmer suicides that's recorded since 2016. As Sainath explains, the NCRB, which was tracking that data, was virtually shut down. It was then demerged. Then again, the role changed, and that is what has led to the fact that there is absolutely no recorded data that the government has access to since 2016. But individual states, as Archana was pointing out, and she gave you numbers for Maharashtra, that's the information, again, provisional, provided during the course of parliamentary questions in Assembly. But we'll keep revisiting that story. Now, the Vice Chairman of Niti Aayog, Rajiv Kumar, has told CNBC TV 18 that the think tank has not held any talks with the government on a pan-India farm loan waiver. Speaking with me earlier today, he said that there are no formal talks held so far on direct income support to farmers. Kumar also spoke about the Raitu Bandhu scheme in Telangana, which is a direct income support scheme. He said any similar nationwide scheme will be expensive and could cost over 2 lakh crore rupees, and hence there is no formal conversation on it at this point in time. Take a listen.
The Finance Minister has said very clearly that it's the state's prerogative and they are doing what they think is right for their state. I have not had any conversation here in Niti Aayog on any such possibility, so I really don't think I could say anything more than that. There are, of course, a number of steps that the strategy document has suggested on how to tackle agriculture, and I think the central government will consider those and perhaps other measures as we go along.
You may not agree with the waiver as being the best way forward, but what can be done to provide relief to the agrarian economy today, sir? The strategy paper outlines the roadmap for the next 2 to 3 years, but what do you do about the situation today?
Oh, you're absolutely right. That's an issue that needs to be addressed, and it seems state governments are doing it in the manner that they're doing it. We were so far completely overtaken by the strategy document and the road ahead. We will be discussing this very soon and intensively on the Telangana model of benefits of 4,000 rupees per hectare per season. If you implemented that at the overall in India level, the cost could be quite significant.
Okay.
Our member agriculture, Dr. Ramesh Chan, puts it in a quite a large. It's probably more like 2 lakh crores or something, or of that figure. Now it's something that the figure is out there and the model is there, is well known. Thing to remember, however, is that the Telangana model is providing direct income support to the farmers over and above all the subsidies, input subsidies that they get. So this could be one of the options. I'm not ruling anything out, Shireen, at the moment, except to say that we in Niti Aayog are addressing the issue. We've taken note of it, but at the moment there is not much that I can say by way of what actions or measures we would be recommending.
Well, Gujarat has emerged as the best state for startups to flourish. According to a ranking released by the Department of Industrial Policy and Promotion, or the DIPP, 27 states and 3 union territories participated in the exercise after the DIPP laid down a policy framework for the rankings last year. Anu standing by with the details. Anu, Gujarat on top. Can you take us through the best and worst performers?
The government today released the state startup ranking list for 2018. The ranking is based on 7 pillars, including incubation support, seed funding support, existence of startup policy, simplified norms, etc. Gujarat emerged as the best performer in the list, scoring 100 percentile and leaving all other 26 states and 3 union territories which participated in the ranking exercise behind, as per the government. The startup hub state of Karnataka found itself in the second category of top performers. It was joined by the states of Kerala, Rajasthan and Odisha. The bottom of the list was the category of beginners, which had 5 states and union territories of Chandigarh and Puducherry. The government's perspective is that the commitment from states towards strengthening of the startup ecosystem has improved, given that now there are 22 states with startup policy as compared to 4 pre-January 2016 when the Startup India initiative was announced. The government data also shows that more states are now providing incentives to women entrepreneurs and facilitating a single window registration system for startups. So overall, the government today said that this shows an encouraging environment for startup growth in the country, but it remains to be seen whether that results into a confident startup community on the ground, given the latest storm of complaints from startups on the matter of angel tax. Back to you.
All right, Anu, thanks very much. So that's the DIPP's startup ranking. Gujarat topping that list of states, but the matter of the angel tax is still being reviewed by the DIPP, and they're asking their colleagues in the Finance Ministry to ensure that action is taken. But moving on, food delivery company Swiggy has raised $1 billion in a fresh round of funding. Existing investors in the company Naspers has led this round, which is the largest biofood tech company in India. Saina standing by with the details. Saina, who are the key investors?
That's right. Swiggy has raised $1 billion in funding from South African conglomerate Naspers and Chinese internet major Tencent. The other big investors in this round include Beijing-headquartered Hillhouse Capital Group and Boston-based Wellington Management Company. Existing investors like Russian billionaire Yuri Milner's DST Global and China's largest food delivery firm Meituan Dianping has also participated in this round. This deal is the largest investment in a food delivery company outside of China, and this makes Swiggy the 5th most valuable unicorn in India, with a valuation of a reported $3.3 billion. Now, Naspers first put money into Swiggy in 2017, and today the CEO of Food and Ventures at Naspers, Larry Ilg, said that the founding team had cracked the winning formula in India. He said, and I quote, "Swiggy has 10x the number of orders per month since we first invested and has expanded its footprint out of Tier 1 to Tier 2 and Tier 3 cities as well." The press release issued by Swiggy today said that since the last funding round, since 6 months ago, Swiggy has expanded to 42 cities and has doubled its gross merchandise value as well. The team plans to use the capital for hiring machine learning and engineering talent, as well as plugging the gaps in its supply chain through its delivery-only kitchens. Just for perspective, close competitor Zomato raised $400 million in 2018, and this was largely led by Alibaba-backed Ant Financial. Other deep-pocketed players in this space include Ola's Foodpanda and Uber Eats. All I have to say is that consumers be ready for more discounts and deals to hit your apps soon.
Well, absolutely. So Swiggy there raising $1 billion from Naspers and other